Hi everyone, welcome back to my channel Manu Issue ACCA classes. So in this video, we will be learning about share-based remuneration, and this is also one of the topic covered in the employment income. Okay, so if you have missed out my previous video, then you can still access it from the playlist, or the link of the same will be blinked on the right hand side of your screen. In case you are watching my video for the first time, do not forget to subscribe my channel and share it among your friends. Okay, so in today's video, we will be learning about share-based remuneration. Basically, when an employer gives share to their employee as a part of their remuneration or like payment package or salary package, then there will be a different tax treatment of the same, and it is divided into the two categories. So now first we need to decide, first we need to think about is while thinking about share based remuneration in the exam scenario is whether the share will be gifted immediately or on the later on in the future date. If it is gifted immediately, it will call transfer of share. Okay, or we can use this term share incentive. But if it will be transferred in the future date, at some point of time in the future, in that case it is called as a share option. But tax treatment of the both of these are different. In this video, we will be covered what is the tax treatment of immediate transfer of shares. In later on video, we will be covering about the share option. So let's move to our today topic, immediate share transfer. So basically, when employers say or employer transfer the share immediately to their employee, it is considered to be the part of the employment benefit. So on which income tax need to be payable as well as NIC need to be payable. Income tax is payable on the value of the share based on the difference between market value of the shares and any amount paid by the employee. Okay. So we will consider the market value of the share and the amount any paid by employee to acquire those shares. The difference of these two we will be considered in the income tax. And for NIC, if the share is of the quoted company, in that case if the share is of a quoted company, in that case we will consider it as a cash benefit, because the share of quoted company can be redeemable easily without any struggling. We don't need to struggle to redeem those shares because it is already quoted and well known by the public. Due to that, we will quickly get the cash benefit. So if the share is of quoted company, in that case class 1 employee NIC and class 1 employer NIC is payable, right, by the respective person. But if it is of unquoted company, in that case class 1A NIC is only payable. Okay, and this includes both employee and employer contribution. Okay, so this is for the immediate share transfer rules. Okay, but now the employee has acquired the share, but in the future time they will dispose of those share at later on date. In that case, CGT will also need to be considered. Okay, and that will be the whatever disposal value and any amount. I think market value that we need to consider for the CGT, disposal value less and market value of the share. Let me confirm first. Yes, we will consider the market value when the transfer, then we will calculate the CGT. Okay, so this is for the immediate transfer of share rules or tax treatment. We will need to consider it as an employment benefit on which income tax as well as NIC will be payable. In case of income tax, we need to take the difference of what is the market value and the amount paid by the employee to acquire those shares. On the difference, we need to pay income tax under the employment income categories. And if it is NIC, we need to look whether the share is of quoted company or unquoted company. If the share is of quoted company, means that share will be easily redeemable, can be easily be sold in the market because company is well known by the public. So in that case, Class 1 employee NIC payable by employee. Class 1 employer NIC payable by employer. But if the share is of unquoted company, means like the company is not listed, not known by everyone, in that case we might be struggle to redeem those share and get we will consider it as a non-cash benefit on which class 1A NIC will be payable. And if the employee sold out those share on later on date in the future, in that case capital gain tax also need to be payable. And how we will calculate it? By considering the disposal proceed less market value at transfer on the difference of gain and loss, we need to calculate the CCT. Okay, so this much for this video. In next video we will be learning about the share option, and it is also very important. I'm most sure after watching out my video of the share option, it will no more difficult for any student. So tab tak ke liye stay tuned with my channel. Do share with the student who are appearing for the P6. So stay tuned for more videos like this. Thank you so much. Have a good day.